We go. Hello, everybody. Good morning, good afternoon, depending on the region you are based now. We are here with Maria, with Matthew, and with Alvaro. We introduce them. Thanks for having us, for stay with us today, guys. As you know, we are going to introduce today the last BC report we have made at TheVentureCity, but also we are going to introduce you to those three companies that we are presenting to you guys today, and trying to go deeper into the challenge of fundraising. So regarding the BC report, as you know, Q4 set new records in capital invested. Last year are also in the prior quarters, with some of the most exciting companies on the planet receiving massive capital allocations. We think that we are really in one of the best moments for venture capital and, of course, for entrepreneurs. And we'll break it all down in this session by asking about their experience to Maria, founder of Tucuvi, based actually here in Europe, here in Madrid. We will have today also Alvaro, founder of Simpliroute, based in Chile. Hello, Alvaro.
Hi, guys.
The startup in Latam, and also Matthew from the US, now based in Vancouver for a while, but actually this is an LA-based company, Sturdy. Hello, Matt. So, again, talking about the last quarter was another quarter, another funding record, driven by the continued influx of capital into the market. We had more entrants in terms of VC, 9,200 investors versus 8,600 investors that went into the space last year, 12 months before. And Q4 was the largest year by deal volume and by capital invested. This represents like a 6.2% quarter over quarter during the whole year. And we've seen investors put more than $125 billion into private startups. Europe was actually one of the main regions getting advantage of it. And the startups like your startup received, not your startup specifically, of course, all of them received more than $25 billion in Q4. So Maria, can you try to first explain us what are you doing in Tucuvi? Mm-hmm. What challenges did you face to raise your seed round? And also, how are you seeing this boom VC world invested in your industry?
Okay, thank you. Hi, everyone. And thank you, Andres. Thank you, TheVentureCity, for having Tucuvi today. What we do in Tucuvi, well, we are a Madrid-based digital health startup. And what we do is we work to make healthcare accessible and efficient for every patient. Because nowadays patients do not receive continuity of care at home when they leave the hospital. And this is basically because we live in a huge shortage of healthcare professionals. We are lacking now 2 million healthcare professionals, and we will be lacking 4 million just in Europe in 2030.
Wow.
So the doctors that we have now obviously do not have time to properly care for patients at home. So what we do is we develop AI and voice technology to provide continuous care for patients and to give professionals time and information. So we've created voice-based medical assistant that monitors health status of patients at home by speaking with them via phone calls. So in this way, we make health AI accessible for every patient. We started 2 years ago. And during this time, we built a great team, a great product with huge engagement, not only for patients, but also for health professionals, huge retention. And probably thank you, TheVentureCity, for helping us achieving this. We also got our CE mark as a medical device. And we build partnerships with great public and private healthcare systems, insurance companies, pharma companies, and working with them, we've created clinical evidence of how we are making actually healthcare systems more efficient. For example, by reducing more than 50% hospitalizations and emergency room visits with the cost that this means, the saving in cost that this means. So now what we are looking for is to growing and expanding these numbers, this team, this product to other, to more healthcare systems, to more pharma companies, like the industry, not only in Spain, but also in Europe. And actually Europe is investing a lot in digital health because it's a fundamental pillar towards making this new plan for resilience in Europe. So we are working toward being inside this funding of Europe for AI companies.
That was one of my questions. You know, you are now actually facing your next financing round. Some VCs has already reached out to us in order to know a little bit more about you guys, because it's true that you are like in a really good, apart from having an incredible team and apart from having an incredible technology running the company, you are in a good way, you know, and a lot of fans reached out to us, you know, to know more about you guys. How are you approaching them? How are they approaching you? What kind of difference you see between fans in different regions in Europe, or I don't know if you have already talked to the US or not yet, maybe not. You are now focused here.
We're focused in Europe because as we are not operating in the US yet, it doesn't make a lot of sense to look for capital there. But it's true that we are speaking with some VCs and investors that had come like organically to us because they've seen our evolution, our growth these last months or years. And one trend related to this, one trend that I've seen in the VC world is that non-healthcare investors are jumping into digital health because they are seeing opportunities. And one curiosity that I like a lot is that as there is more competitors, they are like facing, like they're feeling that they need to differentiate from others. So they are starting to look for new ways to add to the companies, either in market access or in a great network for business development in Europe or things like that. So how are we facing this approach to new investors? Now we can identify what we need the most, and we can find the best investors that can not only add this money, but also these other things that can help us boost this growth, not only in Spain, but in Europe. So that's more or less what we are trying to do now, speaking with them.
That's great. Thank you for sharing, Maria. It's great. Let's go for Alvaro. Let's talk a little bit about Latam, which is another region which is growing super fast. You know, guys, that Latam saw $5 billion in funding in Q4, which is like a 34% drop from all-time high in Q3. But the reason behind this is that we didn't see like the super rounds we saw in Q3. In Q3, in Latin America, you had 5 companies raising capital with more than $500 billion in valuation. One of them was Clip, one of the main unicorn now in Latam. Actually, we were lucky enough, and we had his CEO and founder Adolfo in our last TheVentureCity summit in Miami, speaking with you, with a lot of you in our community. And in this last Q4, 2021, we didn't see these rounds. But the future looks bright for the region, and you know, considering just the year-over-year funding increase that jumped to $17 billion, which represents at the end like a 356% increase in capital allocated in the region. So Alvaro, you as founder of Simpliroute, please first introduce us, your company, what are you doing, how are you disrupting your industry, which is actually a story that I really love. And then we can speak about your next Series B. You have
sure.
capital.
Sure. Sure. Actually, what you're saying is really on point because Latin America is really hot right now. Maybe Q4 was a little slow, but as an overall, 2021 was a crazy year for Latin America. Then first, to the people that are hearing, let me introduce myself. Then Simpliroute, what it does. Simpliroute is a SaaS platform that helps transportation, retailers, and actually any last mile company to make more efficient the deliveries inside the city, using machine learning and artificial intelligence. Then we are helping these companies to make better deliveries in the logistics sector with high-tech technology. Then what happened in Latin America, and actually why we have been growing, because with the pandemic, as a global process, but also especially in Latin America, companies was really underusing technology. They didn't have that many technology in place, especially in the retailer sector. Biggest companies like the biggest retailers in South America and Central America didn't have any actually technology in place. They were really lagging behind. Then what Simpliroute is helping them, and actually the pandemic helping a lot with us, is try to reach those companies and try to activate the market. And we have seen a growth and sustainable growth in the last few years with us in the big retailers, but also in the SMBs. Because what happened with SMBs is that before in Latin America, SMBs were more family-oriented, not using that many technology in the logistics sector in particular, and the pandemic forced them to be a technological enabled company. Then as a company myself, we were really horizontal. We go from companies with 1 vehicle to 1,000 vehicles. Then we had this opportunity to start serving this big new market because logistics and e-commerce was a big market before in Latin America, but we got pandemic increasing in the number of 5x. If I talk, for example, in terms of one particular retailer, some retailers were selling around 8 to 7% of their sales through e-commerce channels. But after the pandemic, in the top moment of the pandemic, they were selling around 20% of that. Then for them, the market increasing in 3x in 6 months. And we saw the same. And for that reason, actually, we are raising our Series B because we are growing really fast. Last year, we grew at 3x in the sales from the previous year, and the previous year also 3x from before. Then we are trying to capitalize that in a Latin American extent. Latin American, when you are seeing it from outside, maybe you can think that it's a similar region with all the cultural things. But at the end of the day, we speak Spanish. That is the only transversal thing, because each country has really a lot of cultural and differentiators. Then we are trying to be at the top player in the whole Latin American market. And for that reason, actually, the Series B is going to be critical for that. As you were saying before, actually, a lot of VC are really moving and putting a lot of effort to try to put more capital here in Latin America. And we had a lot of opportunities now, even though that we just started with the conversation of the Series B. They had doing inbound calls to us, trying to reach out before to starting making the round. And now that we are almost ready with the business plan, we started to reach the market, looking for different conversations. And the reception has been really good, actually, because from the previous moment that when we did our Series A, in that moment, Latin America, it wasn't really that hot for investment. Now with the Series B, big like SoftBank, Tiger Global, a lot of them are putting a lot of effort here. Then that changed a little bit how the US market or European market in the investment sector are seeing Latin America. Then they are having more confidence about how we can perform and how this market is performing in terms of capital. Then it's a better moment, actually, this Q2 and Q3 to be making this Series B if I had done this the last year, for example.
And Alvaro, now that you have started already to talk to funds for your Series B, there is like kind of concern in the industry. I talked to a lot of founders, and a lot of them asked me, well, Andres, what do you think about this year? Do you think that it's going to be as crazy as it was the previous year, 2021? Do you feel that funds are now trying to hold their horses back a little bit? Because that year was like crazy in terms of valuation, in terms of capital invested and everything. What is your feeling as a founder?
Yeah.
Do you perceive like a kind of, I don't know how to call it, but maybe do you feel that the funds are stopping their efforts to invest in your region, or do you feel that it's the same thing and everybody is eager to find the best company to invest in Latin America or your space?
Good question, because I think there is different point of view to see that, answer that, because first, in terms of people reaching out, this year, in particular, the first 2 months of this year, I had more people or VCs reaching me than the previous year. Then I see more movement. People at least is more active trying to make investments in this Q1 and Q2. In terms of valuation, it's a different question, because I think eventually this year we are going to start seeing some movement in the down in terms of valuation, because potentially some big VCs are going to be being a little more conservative. In the US, everybody's talking about it, that potentially are going to be a slow year in terms of VC, because I don't know, the interest rate and different macroeconomical things that potentially could slow down a little bit the investment. Then I think in terms of valuation could be a little bit different, but I don't think in terms of volume, because in my region at least, because Latin America is an activated region. We didn't have that much capital invested before. You see the numbers when you were seeing 2019 and 2020, it's really different amounts of invested capital in those years, again, 2021. Then I think 2022 is going to break records again, 2021, for sure. But I think the logic behind the investment are going to be a little bit different sometimes later this year than the first part of the year. Then see Q1 and Q2, we are continuing seeing investment at the same rates, or at least same valuation than the previous year. And maybe Q3 and Q4 potentially is going to be a little bit slower. But I don't think that much is going to change that much in late stage. Companies with performance or cash flow positive are going to be maintaining the valuation that they have, because it's less inserted in those cases. It's going to be different in the seed stage, I think in Latin America. There were potentially the speculation could be lower this year. But again, this is this transversal thing that Latin America has been activated. And I think VC interest is not going to change across this year. Only small tweaks in the investment and sectors in particular.
Yeah. Nobody has this crystal ball to predict the future, but it's true. You started by saying that you have had a lot of contacts at the beginning of the year if you compare 2022 with 2021. And at the end, the valuation will be a game of scarcity and interest on your company. So probably this is like a very good metric to understand what is going to happen. Let's see what's happened. We are still in the first quarter, and we are actually curious about what is going to happen in our next VC report that we will publish in a few months. Which, by the way, Eugenio is telling me now that you can download this VC report from our website, the blog, and we are now, I think, sharing this link in the chat for you guys, of course, for free, to understand a bit more the space. So one that I have done this advertising space. Let's go to US with Matt. So what is astonishing for me is the sheer number of dollars invested in the US in 2021, around $311 billion in the region, which represents 153% increase in volume, which represents nearly $190 billion increase in just 1 year. So we had an incredible year in 2021, an incredible last quarter of last year, and decentralization was one of the main ingredients for that. Web3, crypto, DAOs are the theme of conversation in every single venture circle we go, and the space is, from our point of view, still in its infancy, but the growth cannot be ignored. The space had just a 7.4x increase year over year, sitting at $25 billion invested in the industry. So clearly for us, this is a space that is seeing massive interest by the VC community. And for sure, if you are a founder and have raised capital in the past, probably you are now facing this question from a lot of VCs asking you, what is your strategy in this regard? What are you gonna do with Web3 technologies? How are you gonna compete with startups that will raise capital based on tokens, or what are your plans in this regard? And our point of view is that we will see companies in Web2 growing, companies from Web2 to Web3, actually migrating from Web2 to Web3, and we will see native companies in Web3, as Sturdy, for example, and that's why we are now doubling down our efforts to invest in the space. And because we practice what we preach, we have today Matt from Sturdy. Hello, Matt. Please let us know what are you doing in this Web3 company, and it would be also great to understand the mechanics of your round, because even if you raised your seed round a few months ago, that was a 5 million round, which is a decent amount of money raised in the US, and also a good one for the Web3 space. So it would be great to understand the mechanics of this space from your point of view.
Definitely. Well, thank you very much. Very happy to be here. Yeah, so Sturdy.Exhange, at the moment, we build conduits between consumers, creators, and brands in Web3. And so really what that means is trying to simplify the onboarding experience for those three parties into Web3. Web3 being defined right now as an NFT. So if you were to come to our website, you'd be able to buy your first NFT super easily. We're one of the only platforms where we take a credit card, just feels like a standard user account. You don't need a wallet. We store your private keys for you. And most of the NFTs we sell are with big music IP. So we've done big projects with Party Next Door, Boy Wonder, and Bacardi. We've also done the first profile picture project, which are very, very exciting in the space right now. That was on the Flow blockchain. We have a bunch of really interesting music type related NFTs coming to platform in the next few months. And so that's the current utility of the site, is we're trying to engage music fans with this new technology, provide new revenue streams for musicians and people who work in music, whether they're a graphic designer, independent labels. And so as we continue to see the space grow, we're going to continue finding these conduits we can build between those three parties. As far as our round goes, it was a really interesting time to raise in the Web3 space last summer. And so we closed our round in June. As you said, it was a $5 million seed round, which felt big for me as somebody that's gone through seed rounds as small as 250,000. But considering what's going on in the space, you're seeing seed rounds of 20 million now and 30 million now. As you were saying, there's two different paths you can go down as far as funding goes in Web3. You can go the fully decentralized route and do a token sale or a DAO and create governance and have no oversight. There's no business registered anywhere. It's all just online. We're incorporated in Delaware. Went the standard American VC route, and we did a priced round. But with that priced round, every investor actually got a warrant to any token we ever launch. So we did a hybrid model. The reason we wanted to do that is I felt that there is still not enough oversight and information from any regulatory bodies in America around what could and might happen to these new types of funding rounds. I think there's some risk associated with going fully decentralized right now. And so we do want to explore the ability to look at these new types of new ways of raising capital via token sale or helping, liquidate our investors. However, I think the space is still a little unregulated, and we are a very visible company. The types of IP we work with are big names in Hollywood, and we don't want to get into any sorts of trouble. So we took a hedged risk against going fully decentralized, and it's worked out for us so far. I mean, I think there's been so much action in the VC world and continuing to go through these standard fundraising tools in Web3, and we're seeing that in our inbound.
That's great. It's very interesting what you were saying. I get this question from founders. How are you going to compete with a company that is raising with similar, let's say, bonds, but with higher valuation just because they have this tag of a Web3 company, And to be honest, I think what you said about decentralization is there and tokenization is there, but we are not still in a position to invest without any risk. So it's good the hybrid model you found for your Series seed, which is also true that probably is going to go super fast. So it's very important to be flexible in this regard, right?
Yeah. Well, I think the hardest part isn't necessarily competing against someone who's in Web3. The hardest part is the rounds are getting so big in America. So for us, it's, how do I compete as somebody who only raised $5 million? As crazy as that sounds, right? I mean, I have competitors out there who haven't launched that are raising $90 million. And, the hard part is understanding how you compete. Now you have to hope that the capital allocation of these companies isn't going to be as efficient as yourself, but that's one of the hardest parts. It's not even necessarily about the tools. It's more about just the sheer volume that's going into the space.
Yeah. This is a question for all of you guys, and you decide who wants to answer first. I'm not going to point you out. But raising capital is always hard. It's true that now capital is becoming a commodity, at least for the last year. But for you guys that have raised money, it's hard. You have to see a lot of funds, and you build your methodology in a lot of cases on the spot. For sure, you have come up with some, let's say, secret weapons that maybe you can share with the community. And it would be great to know what are the 2 or 3 secret weapons you think you have when you are raising capital. Alvaro, you said before that you are growing 3x, for example. What other things you use during your pitch and your fundraising strategy, to convince funds and investors to invest in your company? And again, you can answer however you want.
Sure. I can take maybe that point then.
Thank you.
I think in all the cases that we had raised capital, we did a seed round, a Series A, and now we raised 8 million. Each time that we had raised money, we are not critically needing the money. Then I think that gave me a lot of space to be really calm talking with investors and not trying to need the capital to make the company survive. That I think that is the first point in my strategy. Is really basic and maybe cliche because everybody talk about that. Don't raise money needing the money to survive at least. But I think that is the first topic I want to talk, because in my case, if I needed that particular money or the company didn't raise that particular round and could be, I don't know, don't have more liquidation, for example, could be the condition really different and more complicated. And actually had to take, I don't know, worse deals, worse valuations for bad investors because I needed the capital, not the investor itself. Yeah. Then first is that deciding when to raise capital or seeing your cash flow and understand how you are going to finance your company in the next 18 months, for example, is a critical step to start building a series for us. After that, I try to reach as many investors as I can when I try to do the round. Here in Latin America, maybe it's different in the US, for example, because you have more investors and more vertical investors, because I don't know, logistics SaaS investors, and that there are I don't know, 20 in the US. There's none of those in Latin America. Then for that reason, and the investment thesis in Latin America is more mixed, that they're investing more in companies than in vertical itself. You have to be reaching out as most potential investor that you can. Then I think that is the best thing that you have to do. And investment in my strategy is not at one point in the time that you have to be doing. It's something I do across the time. Then I build a newsletter, for example, that is usually someone tells you that you have to be doing, but when I met someone, I try to give them as many updates as I can before to try to reach us around. And with that, I had to build trust and show them what we are doing. Then when I'm going to be deciding doing the round, it's easier because they already know what you are doing and which point are you, if you are interested or for them or not. That I think that is a critical step for me, because building those relationships, understanding that investors don't always invest in people, in business, invest more in people. Then understanding that and building relationships with them is critical. And start raising the round before raising the round is something I understood in the Series A. When I was doing the seed round, I was, okay, and now I'm going to raise. Then it was harder. The Series A was easier. And now the last time that we raised, it was easier than before. It's not always easy, it's easier. Then, but each time that we are raising, because I know more people and I try to reach as many people before to needing the money, I have more opportunities to be showing them what we are doing and they can tell me beforehand, I'm not interested, or when you are going to be in this stage, I'm going to be investing. Then learning more from them is an interesting thing. And closing, and something that we discussed a few weeks ago in Miami, is that asking for more feedback from investors, I think has something that I learned a lot, is that when I was building my strategy to reaching different investors to see they're going to be investing or not, and always you're going to receive a lot of no, because that is life. Then what I did with that, and I agree with what we discussed at the other time, is that trying to get as many possible understanding why they are saying no. It give me more feedback and information to start building this newsletter and database that I have, because they told me no because I'm not ready in the term of ARR, for example. Okay, when I'm going to be there, maybe they're interested. Or they tell me no because it's not my vertical. Then I'm going to not pursue that opportunity. Then give me clarity about how to make the approach. And especially in Latam, is that they are going to tell you no with not that many feedback. Then you have to teach them, the investor, to tell them how to tell you that feedback. Because with that, you are going to build also trust, in mutual trust.
Very good point. What about you guys? What about you, Maria?
I can go. Thank you, Alvaro, for saying that it gets easier. We're in a stage, we're in the seed stage. So obviously we are starting to create this trust with investors, with actual one and new ones, obviously. But now we are trying to focus on, when we speak with digital health investors, for example, we're trying to mitigate the risks that they see. For example, in digital health startups, the key elements that they fear because of life's experiences are poor adoption of healthcare professionals,
yes,
or bad healthcare experience, or a lot of pilots but no clients, things like that. And this is something that we knew from before, and we try to really improve and show how we are improving. For example, there are a lot of startups in this space that create awesome technology, but with poor patient experience. So at the end, the patient do not want to use it, and this doesn't work. So we have great patient experience, and that is something that they value a lot. Also, we have great patient engagement. Usually the engagement of a patient in digital health solutions is around 50%, and in our case, it's always over 90%, which is huge and really nice, and they really like to hear that. And also about the adoption, it's the same. Sometimes the technology is great, but it's not integrated in the systems or in the procedures that healthcare professionals do on a daily basis. And we put a lot of focus on that when we build the product. And we are seeing quarterly how every unit of a hospital increase the number of patients that they introduce in our system. So that is great. That means that it's fully integrated in their daily routines. And also about this not just pilots, but clients. In digital health, you always need to do a pilot when you start working with a new company, but we've converted all of our pilots into clients, and not only with.
Congratulations on that.
Thank you. Yeah, not only with like a hospital. When we start working, we usually don't try not to work with a single hospital, but with group of hospitals or pharma companies that we start working with one therapeutic area, but we try to make a contract or a partnership agreement that includes different therapeutic areas or different units from different hospitals in the same group. So always start with a pilot, but then convert with to huge contracts. So that is our secret weapons that we put effort.
So your secret weapon is that you are meeting the goals, right?
Yeah.
Which is great. That's great, Maria. And Matt, where are you? What would you say is your secret weapon to raise capital? Which for sure is super interesting.
Yeah, well, I think that number one is you have to have a great team, because one thing I know that investors always look for is chemistry amongst team members, and if things aren't going well inside the house, then things aren't going to be going well on the product. And so I think that having a great team has been really, really helpful for me as the CEO and the fundraiser to go out and fundraise. I also think, similar to what Maria is saying, is if you've already been through a seed round, a secret weapon going through to the next fundraising rounds is, did you go out and accomplish what you said you would accomplish, right? And so it's really important having a vision for where you want your business to be, but it's also really important to set realistic goals in that first fundraise about what you're going to do with the funds and what you're going to accomplish before your next raise. And so just understanding that every time you raise, all it is to get you to the next raise, right? And that's probably just my secret is being realistic, and being realistic with the goals you can accomplish.
Yeah. At the end, it's about deliver, and deliver. That's a really good point. I think we have some questions from the audience. I don't know who is reading them.
Yeah, I'm going to read one of them.
Okay.
Yeah.
I have access to the chat, so thanks for that.
Yeah, the host told me. Yeah. I want to read the Igor one. He said, what is the most important topic to scale your platforms? Really interested to understand the tools perspective, not the people, which is really asset to scale. I mean, the scale to grow. I can actually answer that because it's really interesting. In our case, actually was one of the critical points, because we had the people in place, we have been growing fine, but we started to get as many customers as we potentially could have. Actually, it was a flooding of customers each day. And one of the key points here for us, it's a very technical thing, but we are retrieving a lot of GPS information. But because it was a success thing, a happy problem, because we were receiving that many vehicles in the platform, and we charge the customer per vehicle. Then those vehicles were retrieving that many GPS information that we start destroying the platform in some way, because we were doing ourselves an attack, a DDoS attack, because we were sending that many GPS information to ourselves. Then we had to restructure a lot to start growing. And that's a critical thing, because when you're starting the company, Paul Graham and all of them are telling you to build things that don't scale, because you want to build things to understand what the customer needs. But after a while, you have to shift that, and that usually is on a Series A to Series B stage, that you already know what the customer wants. We already have 1,000 customers. Then the way that you start building your tools and your platform, it changed internally. You are no longer doing MVPs for anything, because in my case, I'm working with enterprises, with the corporations. Those companies are no longer want to be using platforms that not 100% reliable. You're talking about more boring things like SLAs or contracts, things that usually they want to be responsive in that case. Then understand when is the critical moment to start changing the way that you are building your product, to start continuing scaling up that. And maybe that's going to be slower. And for me as an entrepreneur, it's hard, because I'm more the kind of guy that I create a line of code and go to production immediately. But that doesn't scale. then eventually you have to shift your mind and shift the culture of your company a little bit, at least, that you no longer are building something immediately because you have to be in production next day. You have to be building something that's reliable for your customer in the long run, especially in my case, because I'm a really operational company. Then thinking and doing the stop to start building something more scalable, because making slower now the building is going to be faster in the long run, because then you can scale up again. That was something that we had to do last year and was difficult for us. And we already solved it, but was a critical shift of mind for the company.
Yeah, that's great. I was having this kind of conversation this morning with a company invested by us. What is the right balance between building a great platform and building a great growth? And this is going to be always a huge topic in all the startups that will love to grow fast. So unfortunately, time is constrained and we have to finish, but I would like, there's another question? Okay.
Well, I have one. I think I'm the guy from the question. Then I have another question, but I'm not going to answer this. I'm going to give you the opportunity to answer them.
Okay, go.
It's from Eduardo. What is the main point you take in consideration with believing or not a startup valuation when raising a round?
No. Sorry, for me? No.
It's for the panel. It doesn't have a particular name. I think it's more for a VC focus than us. But
can you repeat, please? Because I was.
Yeah. What is the main point you take in consideration when believing or not the startup valuation when someone is raising a round?
Yeah, that's a really good point. And it depends a lot on the stakes. Because, of course, when you have your team, you see, and I have experienced this like as entrepreneur, you see companies with an incredible team but that haven't built anything yet, and they are raising capital in an incredible valuation, and you don't understand anything. And in other cases, you see quite an opposite thing, So I would say that at the beginning, it will depend on the kind of competition you can build on the round. Having a lot of buyers on your round is probably the best option to raise, to increase the value of the company. I wouldn't urge any one of you to decide for this kind of value. I think it's more important at the beginning to choose the right investor more than the investor who is willing to pay the most. And then once that you have some traction and revenues or figures to measure, then of course there is more tangible numbers to touch with, and then it will depend a lot on the multiple of the comparatives on your business. It will depend a lot on other opportunities we are seeing in your industry. And again, it will depend a lot on the number of competitors that as VCs we have to invest in your company, But I would say that especially for the first rounds for your company, the most important thing is the partner you are choosing than anything else. And now we have to finish, but I would like to, because it's not just us giving advice to you guys as founder, I would like to ask for your advice now that you are raising for the VC world. Just one sentence about something you missed or something you think really good VC always do when is assessing your company or when is interacting with you. Something that we can learn from you as entrepreneurs raising capital. Maria, maybe I think this sentence is for you.
Something that Alvaro said before, I think clarity.
Clarity.
Yeah, because maybe if you say yes, even when you say yes, clarity, why? Because you see the potential, because you like the actual numbers, market, like to understand why. You say no, obviously, why? Because in that way we can improve now.
Yeah. So feedback. Yeah.
Yeah, I agree. Actually, I'm going to say two things: clarity and consistency. First, clarity to tell you yes or no as fast as they can. Because if they are not interested, they should tell you as right away they are not interested, not giving you yes, no, half-baked answers. And the other one, consistency, because if they're at the beginning of the romance, they're acting in some way, but when they invest, changing the way they're working, it's a bad thing. Even though they're the other way around, they are really not interested and then really intense. I don't like that. Then I prefer a consistent investor that tells you the way they are going to be helping you, and you adjust your strategy based on that. Maybe there is more hands-on investors. They want to be helping you a lot. But if they are telling you that, you maybe adjust the investment strategy for having that. And the other way around, if they tell you, no, are more only money, I don't think it's interesting, but you can take it or not. But knowing beforehand what you're going to have in terms of all the long run, because this is a marriage, it's going to take for years, then understanding and taking a good decision is part of that.
Yeah, the marriage example is a good one. So thank you. It was great to have you guys. Thanks for coming, the three of you. Also, thanks to the audience. Again, you can download the visit report we have prepared with a lot of cariñito in the website, in our blog, and also we have already shared the link in the chat. And we will probably celebrate another corner of the Wanacorn. We'll invite amazing folks this time. And thanks. Good night for some of you. Good afternoon for some of you, and good morning actually for you, Alvaro. It's very there.
2 p.m., but it's morning, could be. Bye, everyone.
Thank you. Bye-bye.
Bye-bye.